This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market, and today is another down 2R day. So, I don't know what's going on with me, but I fell apart today. Not in my trading, but outside of trading. Because usually I'm extremely regimented and disciplined and consistent in the work that I do. But the second that the market proved my bias wrong today, and I knew that I got the analysis wrong today, I don't know what happened. Something just switched inside me, and I got so frustrated and so pissed with the market, which is usually not the case. And from recent history, I know that red days literally don't mean anything because I can show up, follow the same process that I follow, and have a completely different outcome and have the outcome that I'm looking for. So it doesn't matter. But today, I don't even know, man. Just ate me. And I literally did nothing, falling back into old habits, scrolling through reels, scrolling through Twitter, just things that I usually don't do at all. Thoughts of failure, doubt, self-doubt, negativity. The way that I'm thinking, it's completely flipped. And I think it has a lot to do with my daily routine right now and how I'm operating. I'm just fucking lazy right now, and it's starting to piss me off. So I'm about to go hard because I can't stand it anymore. I literally can't sit with myself. It's also probably the fact that I waited 2 days to trade because we have PPI and CPI, and I know that those days before PPI and CPI are not going to be optimal for my model in the way that I trade. So I sat them out, and then I finally got to the day where I did trade, and then shit the bed. It is what it is. But the way that I'm handling this red day, it's getting to me. It's bothering me. It's why am I handling a red day like I rarely do this, and when I do is usually when I fall apart. And there's other cycles that are going on that are repeating, or that also tend to lead me to fall apart. Like, for instance, I'm not journaling right now. Usually when I stop journaling, which I have like a little notebook right here, right? Usually when I stop journaling on a day-to-day basis, that's when my habits kind of fall out of line, my daily routine kind of falls out of place, and I just start feeling it. But we are down 2R to start the week, and I'm kind of realizing that PPI and CPI are never even good days to even trade. And the days before that are also not good days to trade. So what do? Do I just not take a single trade the entire week of PPI and CPI? It's kind of frustrating when CPI is all the way on Thursday in the latter half of the week, and everything before then is going to be shit. Monday was shit, Tuesday was shit, Wednesday was shit. So what do? Now I'm kind of frustrated at the model that I'm with because it demands that I be extremely patient, and I kind of lack that. I kind of want to be in there every day, which isn't necessarily a good thing, but I don't have to be demanding like full swings from price. I can just, have like a little scalping model and be like from here to here and that's it and be done. But at the same time, I'm also watching other YouTubers and looking at what other people are doing and seeing how they do things, and that's making me want to change how I do things, and now I'm seeing the market different. It's just a lot of cycles and mistakes that I've made in the past that I'm experiencing going through right now. So I just got to keep myself grounded and just do the things that I've been doing. Nothing changes. So I'm going to go hard. I'm going to keep journaling, and I'm going to pick this mind back up. So let's get into today, because that's the whole point of this video, and I just went on a tangent there. But I had 2 losing trades starting at 9:44 and then another one 6 minutes later, which weren't even bad ideas. The first one was definitely a bad trade because it was completely impulsive and before anything was actually confirmed. But how I felt going into today, I was actually confident in the idea of a bullish bias because I didn't see any reasons for the market to want to go lower in the moment. Obviously, in hindsight, I see a lot of reasons for the market to want to go lower, and it presented my gap fill setup where the market gaps up and I can look for the market to reverse and fill that gap. But I didn't take it because it didn't meet certain criteria that usually presents itself when that happens. So the draw that I established for today was the all-time high. And I'm sure many of you were also looking for a new all-time high because the market's just been bullish. Usually when my bias is I'm just going to be bullish because the market's been bullish, that's usually what leads to losing biases, incorrect biases. So the higher time frame narrative that I established, the double up in the weekly range is bullish based on how yesterday's candle closed. I thought I couldn't make any reasonable assumptions that this should be a down close day, especially with how things are setting up. And then the market criteria, there's a smooth edge in the overnight session and price trades away from it on PPI. See, I'm noticing this. Usually I'm going to target this if I see there's a smooth edge in the overnight session but the market trades away for it like we did here, right? Because usually I'm targeting areas in price that are smooth like this. But in this case, I was not targeting that level because based on the higher time frame narrative, I'm thinking we'll now want to reach for that today at least and then draw for the all-time high, especially with the protraction in London and how that formed a solid 1 hour inversion fair value gap. Another thing that I did today that that I never do is I used an inversion fair value gap as a point of interest to try to frame that long. And I never use inversion fair value gaps as a point of interest. So usually when I do things that I never do, what does that lead to? Mistakes and losing trades. I'm not going to say that was necessarily a terrible idea because the long made sense. And I still could have pulled out equity from it. Had I executed it at the right time and taken partials, it would have been a green trade. It would have been a green day. But my entry was the problem today, and we'll get into that. So how am I going to expect it to get to the all-time high? I like to see price drop initially to run against those who may be profitable from PPI, clearing data low, then look for signs to buy inside of the 1 hour inversion fair value gap, and fail to close large opening range gap and lead the data high intact as it drops down. So I was looking for my bullish premium gap opening setup, and I was only looking to be a buyer, right? What I wanted to see, which will just drop to the 15-minute in my pre-market annotations, what I wanted to see was the market open, drop down, take this low, and then work for data high and the all-time high. The thing is there's a reason for the market to want to come down here and complete this sell model, fitting within the narrative that the market has been overextended over the past how many days? 1, 2, 3, 4, 5 days. We've had 5 consecutive up close days without the market taking a previous daily low. So the market has now become overextended. And although it looks like it's going to run right into all-time high, it also makes logical sense to see the market to want to come back inside the range because tomorrow is PPI. Would we expect another large up close candle kind of day if CPI is tomorrow? Did I say PPI? I meant CPI. If we have a really, really high impact event coming out tomorrow, do we expect a large up close day? Do we expect a large move before that event? 9 out of 10 times, we do not. So that's another reason to anticipate the market to want to come back inside the range. Pair that with how the market's set up in the overnight session, where we clearly have this sell template setting up. Asia low, left intact. London low, left intact. PPI trades up, manipulation. We open near the high day. We have a huge premium gap opening. Here's we settled yesterday. It makes sense to see the market come and fill this gap based on the narrative from the higher time frame. So yes, there was reasons to frame a bearish bias today that I was kind of blind to because I came to the market and I was really confident in the idea of higher prices. Though when the market sets up like this, I should be looking for lower prices. Typically though, if we go to my bearish premium gap opening setup, right here. Typically, it's going to open literally at the high of day. Opens at the high of day, right? That's one of the rules of the market criteria. In this case, it did not open at the high of day. It opened off the high of day because we had that PPI manipulation. Then it came back inside the range. So now let's get into the trades that I took for today. So the first trade was at 944. I'm going to show the executions on Top Step. So now the account balance is 50,275. So cut back quite a bit today. This was, I think, my largest losing day on the account so far because I was extremely overconfident in that bullish bias. So this was literally my largest losing day on the account so far, but you can see that it's nothing, it's not an outlier kind of day, right? Usually when I have 2 losing trades, it's going to be between $150 and $200 as we see here. So it's nothing crazy. I'm down 32 points. On this day, I was actually down 39 points, which is, I'm not sure how I didn't lose as much money. Doesn't make sense. But in trade 1, I think it would make the most sense if I just show the recording. So let's open up the recording. Okay, another thing to note about how overconfident I was today and how I know I was overconfident because I was annotating price, right? I'm recording my screen, I'm annotating price. I'm stating exactly what I want the market to do. Now, when I'm making these annotations subconsciously, I'm feeling like I've got a good read on price. I know exactly what this thing is going to do, extremely confident in the bullish bias. And then at the end of the day, I'm going to be able to sit back and make this YouTube video and show my audience, oh, look, I was calling it out in real time before it actually happened. Look at me. I'm so cool. I'm so good, right? So this is going to impact my execution, and it does directly. I'm making all these annotations. So the first thing that I want to see is I wanted to see the market leave this high kind of intact. I didn't want to see a lot of damage done be above this high and then drop for data low, which that happened. I would like to see a shallow poke stay intact and move away from this level to clear data low. That's ideal / a reason to draw back here. And it did that. So when it does that, now I'm starting to get confident in myself, right? So as it starts to break lower, I'm annotating the sell side under PPI low is next. Right there. See, when the market's up here, I'm saying we're going to go down here. It does that. Now my confidence is even more boosted. So the first test of that 1 hour inversion fair value gap, I have a 5-minute close above it, which is basically, this is what I was looking at. To put it back on the chart. This is the inversion fair value gap from the overnight session. And I never use inversion fair value gaps. So on that first 9:30 candle, what does it do? It trades down into it, right? But where do we close? Right here. So it closed above it. So that's an indication of strength. That's a first sign that, okay, you know, my bullish idea, my long idea could be confirmed, that I really, really had to see a drop below the sell side under the PPI low. So at this point in time, I'm noting how this is basically left equal, and we literally only went above that high by like 2 ticks. So I'm thinking there's a strong reason for the market to draw back there. And that's exactly what I was looking for. Now it's giving me all that information. Now everything is looking good. Now I just need to confirm the reversal down here by watching how the market reacts to this 1 hour inversion fair value gap. I had a close above right here. Okay, that was good. So I'm noting how, again, on the 5-minute time frame, we had another close above that gap. So now we've had 2 consecutive drops into the hourly inversion fair value gap, but a close above it, which means as the market keeps driving below these lows, I'm going to anticipate the market to fail because the previous candles have indicated signs of strength reacting off this inversion fair value gap. That's how I get into trades. So now I'm just waiting for confirmation. So the market is driving below that second 5-minute candle's low that has traded down into the gap, closed above it. And then boom, displacement. Now the thing is, if you look at my annotations, note how I was noting this as a potential future inversion fair value gap, but it was really small, so it doesn't necessarily look ideal. This gap never got inversed. On the displacement, I ended up buying basically at the market. So from doing my monthly review last month, I know that entries at the market are bad for my trading because usually when I'm entering at the market, it's impulsive. In this case, I don't have the buy and sell buttons right here. If we go to Top Step X, you can see that I literally removed those because I have that tendency to just jump in at the open, right? So I literally hide them. I hide them. But how do I get around that? I basically do the same thing with the limit order. So I'm looking at this displacement. I'm getting my limit order ready, right? I'm getting confident in this idea. Note that there's no change in the state of delivery. And my entry model is I need a change in the state of delivery. What I consider a change in the state of delivery in this case would be this series of consecutive down close candles that has removed liquidity from the marketplace, meaning it's went below an old low here and here. So in order for this entry to be validated, I need to see the market cross the open price of this consecutive series of down close candles or close over this fair value gap that's in the price leg that removes liquidity from the marketplace. Those are the 2 ways that I confirm a change in the state of delivery. Number 1, a fair value gap has failed in the price leg that removes liquidity from the marketplace. Or number 2, the open price of that consecutive series of down close candles is violated. In this case, does either of those happen? No. But I was so confident in a reversal here because the market was giving me everything that I was looking for that I went ahead and executed before I ever had the change in the state of delivery, and that was my mistake. So we can see that it trades into this gap, right? Go back and annotate it. So we can see that it traded up into that gap. Did it ever even close over it? Not at all. So is that a sign of strength or weakness? That's a sign of weakness. And in order for there to be valid displacement, I need to see this candle close on its high. That is going to be how all displacement basically is. It's going to be a solid up close candle that closed on its high. doesn't tap the gap and then come off of it like that. It's not ideal. It's not what I want to see, especially if it's reacting to a premium array like that and I'm bullish looking to buy the market and that's the reaction that it's giving me. That's not what I want to see. So because I basically entered at the market, dragging my limit order up without ever getting a change in the state of delivery because I was overconfident, now I have nowhere to frame my risk at all. Where am I going to frame my risk on this trade? There's no discount array in here that I think the market should respect that I can frame my stop off of because I just have one up close candle. There's no new discount arrays forming. Premium arrays have not failed yet. This entry is extremely premature. And because I'm overconfident, what do? I risk more. I risk $100 on this trade. Basically, what I'm thinking in this trade is I am so good, I am so cool that I could literally bottom tick the market on the 1 minute time frame. That's kind of what's going through my mind at this point in time. So I can show you guys after the fact and be like, oh, look at me, my entries are so cool. So I stop out on that. I do a little bit of journaling, live trading notes. Notice also how my live trading notes, I only made one note throughout the entire session, right? Usually when I'm not communicating with myself intraday with how I'm feeling and what I'm looking for and how I'm reading price, those are my worst sessions. Those are the sessions where I tend to perform bad because I kind of keep everything bottled up inside me. I'm not communicating with myself how I'm reading price, you know? So I see the potential for this to still develop. I knew I was way too early on the first trade because I never got a CISD. That was definitely an issue, being way too confident and mistiming the move. A loss that is easily preventable. So that's basically the only thing that I say. And then I'm back in at it, looking for the same idea again. Now this time I actually do have a change in the state of delivery, right? 1, 2 down candles, removes liquidity from the marketplace, takes that low. But there's no displacement. Now this was not even a bad trade. I'm not mad at, I'm not really upset. I'm not upset about either of the losses that I took today, okay? They're both lessons. Every failure carries with it an equivalency to success, meaning there's a lesson that I can learn from each loss that I take. But right here, what I would have liked to see was more displacement, more aggression, more energy coming back inside the range. I really wanted to see a strong up close candle close over the open price of that. But we just have this small up candle that kind of barely just takes the open price of that. So it's not necessarily what I want to see. And then again, I'm doing the same thing, coming back in. Now in this case, I didn't execute too fast. I have a rule that says I have to wait at least 5 minutes between each trade that I take, right? Hopefully I have that written down. Let's see. Kind of organized everything in my Miro board recently. Rules, engagement rules. Must put space between losses of 5 minutes minimum, right? This, there is 6 minutes, so that's fine. Not breaking a rule. Still not breaking a rule. This time I have a change in the state of delivery. I'm thinking I just mistimed the market. And I get stopped out again. So how I reacted to these losses in the moment, you know, I wasn't too upset about it because, you know, I probably just mistimed the move. I know the mistakes that I made. I'm going to reflect on it. What made me really upset after today was the fact that the market never delivered what I was looking for. I was so confident in it delivering those highs right here, right? You can see where my take profit is. I was so confident looking for those highs. In this case, the risk is managed, right? Because I can use the midpoint of the down close candles, which I thought was a bearish order block or a bullish order block. So my risk goes below the mean threshold of that, the midpoint. And the risk on this trade is only 14 points. Not bad at all. So I stopped on that trade and that's it. So into that session rather quickly. And the market never delivered what I was looking for, which kind of set me off, which I don't know, kind of weird. I think what's going on with me right now is things are just happening slow, you know? Trading is a very slow game. It's a marathon. You can't rush your way through this. You only get one good session a day. You have one chance, one opportunity to prove to yourself that you have gotten better with the work that you've been putting in off the charts. And if you fuck it up, it's fucked up. And in this case, I only have 3 trading days this week, Wednesday, Thursday, and Friday. Today, I went over 2, struck out. Tuesday and Monday, I knew there were going to be bad trading days, unfavorable conditions, so I did nothing, which is good. Which is good, right? And Monday, also not optimal, not ideal. So here we are come Monday, PPI, or come Wednesday, come PPI. Kind of the same thing, because honestly, even if I had the bearish bias correct, I don't know how the fuck I would have gone on side with this at all. This doesn't make sense to me at all. And I'd probably see this consolidation and be like, okay, I'm out of here. Even if I was waiting for a sell, even if I saw the market break lower and I was waiting for a sell, waiting for a market to rebalance this range, how would I have gotten on side with that? This price action is terrible. It is absolutely terrible. There's no way I would have sat through this and actually timed a solid entry and found a way to get on side with this. So the best move today was doing what? Nothing. Or taking this, right, where there actually was displacement, where the market actually did confirm a change in the state of delivery. Once I was knocked out of the market for the second time, this is where I got stopped out on this candle and this candle, boom. And then displacement, change in the state of delivery, you can buy that. Now ideally, I would have taken partials locked in equity there with a stop loss of 16 points. I have a fixed stop loss of 16 points. That's a little under 2R on the partial, right? But you have to lock in equity. And I believe what I would have done for sure on this trade was, when I see the market consolidating like this for a really, really long time, I probably would have ran down equity and exit, trimmed 2 out of 3 contracts. If I didn't partial at this high, the second best move would have been trim 2 out of 3 contracts that I trading 3 contracts right now as the market runs above this high, because I would probably be feeling anxiety in this position as the market's in consolidation. I'd probably be feeling a lot of doubt about whether it could actually deliver these highs or not. So the best move would be to run down equity as it drives above a high, a new swing high that it's formed. So this, let's say that's the best case exit on 2 out of 3 contracts. Still 40 handles. Still a decent move, still a solid chunk, right? Which is all you need to make money. That's fine. I think I'm making things really hard on myself, demanding that I get the bias right for the sessions that I do trade. But it just requires a shit ton of patience, a load of patience. It requires that I sit and wait for the good trading days, and when they're there, know how to execute them properly. Because I thought I had a really good read on price today, but I had the approach incorrect, which is fine. Another reason that I was looking for the market to trade higher today was because I based today off of last month's CPI, but today's PPI, and each day is completely independent of each other. So if we go back to that, let's see if I can jump there. Probably not in a 1 minute time frame. Let's see if we can do it on a 15 minute. I believe it was August 13th, maybe. I don't know. I'm not going to find it. But basically what happened is we had a smooth level of liquidity in the overnight session. Kind of the same thing, but it was more of a range. The market left that range on CPI. It dropped down, took the data low, and then traded higher for the rest of the day. So I was kind of looking for that same thing today because I thought the higher time frame narrative appeared to be bullish on the daily time frame. Was not really thinking for many late reasons for the market to trade lower today, but in hindsight, it makes sense. We've had 2 small range days, Monday, Tuesday. Wednesday trades above Tuesday's high, and we have a sell model developing in the overnight session. Typically, when Asia and London is set up like this, that's creating a nice sell model like we have here. So you can see buy side of the curve, right? Sell side of the curve. Very nice. Very nice. So there you have it, your sell model, which I was not anticipating today. But I didn't have to in order to make money, which is why you take partials. But today was an issue to overconfidence and mistimed the move. So that's going to be it for this one. If you're watching towards the end, you're probably a subscriber of mine, maybe a regular watcher. So I'm going to let you guys hear this idea and you let me know what you think. I'm thinking about starting one of those YouTube memberships or whatever because I'm about to qualify for it. You need... Where's Chrome? I don't know. I'll probably go here. So if I get 70 more valid public watch hours, and I can start the membership thing. So what I'm thinking about doing is starting a YouTube channel membership and including all the resources that I have from my trading career, such as all the notes that I've taken on ICT mentorships, and how I went about my process of becoming an ICT trader, sharing all my TradeZella systems and processes, like all the templates that I use for my daily reviews, and doing a breakdown of how I use these on a day-to-day basis. And of course, TradeZella is broken right now. There we go. So kind of like putting in there these templates, all the process that I use, all the systems that I have for daily reviews, monthly reviews, weekly reviews, all that, and as well as my Miro board, posting my Miro board in there so you guys can kind of check out, get a look at my process, maybe give you some critiques, maybe learn a thing or two. The notes that I have from Umar Ashraf's stages of trader development that I'm following and that has been working and has literally changed my trading game. And then as well as my Notion databases and everything that I've created here, like the optimal intraday study model system, and maybe all my progression and all the things that I've done throughout my entire trading journey, just putting like all these things into like a vault for members specifically, and having that on YouTube as well. And then maybe doing live streams for members, maybe like once a week, to where we can kind of just like hang out and talk, and obviously member posts, things like this and things like that. So just an idea, not something that I might actually do. I don't know. You let me know, give me some feedback. Also, on top of that, I forgot to mention this, but I also applied for an affiliate link with TradeZella. So you guys know how much I believe in TradeZella and how much I use it. Literally all my processes and systems are in TradeZella. This is another thing that has completely changed my game around. If there's two things that have changed my game around, it's going to be number one, that video, the 5 stages of trader development from Umar Ashraf, and number two, actually tracking my data and keeping everything integrated into one system on one software, which would be TradeZella. So with the affiliate link, if you sign up using the link, my link, which I'll probably put in the description of this video, I guess, I don't know how this shit works. My first time doing this. But if you sign up using this link, then I get a commission from that. So you'll be helping me out. You'll be helping me help you out, because I believe TradeZella is an absolute necessity for all traders. I don't think it matters what stage you're at. I think it's extremely important to have systems and processes, and having that all integrated into one software is just, it makes things easier and extremely efficient. And you have to know your data. So I think this is extremely important. I probably should have said this at the front of the video, but I forgot, so I don't care. I'm just going to put it right here. I'm going to put it in my bio in the description of this video, and I'll figure out how to start using this. So that's it. So I'm thinking of starting that YouTube membership. I have an affiliate link on TradeZella, and I'm doing a top step eval, and I'm building a trade system. A lot of things going on. That's going to be for this one. Talk to you next time.